right, folks, welcome to Stamps Don't Lie and other hidden inflation indicators that could save your investments and how to take advantage of them. This is being put on by Gold IQ Group. Let me give you guys a quick disclaimer. Go ahead. You want to take me to that? First, Gold IQ Group, the smartest minds in metals. Look, guys, we put together a group of people from various aspects of the investments, precious metals industry to create an organization that was education first, to deliver personalized experiences and to give you the best support possible. Gold IQ Group is a fully licensed metal dealer, fully secure and compliant. LBMA, COMEX, silver mint metals, IRS approved depositories only. And that includes for custodians. And one of my favorite things to talk about is that industry leading buyback policy. Absolutely top shelf IRA account set up completed same day. That's the pitch part of it. Let's jump to the disclaimer. So, guys, quick disclaimer. The webinar and the information presented today is for education purposes. We're not giving financial advice. This is all our perspective, what we perceive, what we think you should be looking for. Remember, past performance is not indicative of anything, any future results. There is a full disclaimer at the bottom of the goldiqgroup.com website, or the completeinvestor.net, which is Drew's other company. So if you want to read the full disclaimer, it's all there. So I would like to introduce you guys, if you haven't met him yet. This is Drew Urasek. He is a finance industry professional for over 20 years, investment grade metals analyst for 10 plus. He's helped thousands of people safeguard their retirement accounts. And here's the thing, and I do this with you, Drew. I've known Drew for years, guys. I personally have gone out and I've sought the best and the brightest to bring education to us because I myself participate in the things that we talk about. And I've known Drew for years, and I got to tell you, I'm always impressed by what he has to say. The actual entire conversation that we're going to have today about stamps being an indicator was something that he said to me in a meeting, had said to me and one of the other partners in a meeting. And it was so interesting. I said, you know what? We should really do a webinar for that because there's other indicators that people don't really consider. There's other things that people don't look at, and let's give them the reason to look at it. So that's what brings us here. Drew is the chief metal strategist at Gold IQ Group. He's also the managing partner at the Complete Investor and a decorated U.S. Marine with 8 years of service. Drew, thank you for your service, and thank you for being here with us today. Take it away.
Thank you so much. And Michael, you always put on great events. You're a curator of the best and brightest in all aspects of investing. I'm grateful and humbled to be on one of your programs here, teaching people how, to protect their money, how to invest better. Now, tonight's agenda and tonight's topic is a little off the beaten path, but trust me, when you hear the full story of what I present, you're going to be enlightened as to what you might want to look at when evaluating the protection of your wealth, especially when it comes to returns on investment, but then securing those investments against hazards. Now, number one, you got to understand inflation, because even if you're not if you're a technology investor, if you're a conservative investor, if you're a bonds person, if you're a dividend person, if you are a precious metals person, you've got to understand that inflation is going to hurt your net returns. End of the day, right? How much do you keep of your money is important, because as we get older, right? As we near retirement, as we go into retirement, either A, we're not going to be working, hopefully we're not working, or B, if we are working, we're not making as much money as we used to. So our money's got to go farther and farther the older and older we get. And inflation is probably the number one thief of your wealth, period, end of statement. So you have to understand that. And we're going to go into the number one, I call them the top two real indicators of inflation. Now, when you're looking at it, and this is just me personally, when I'm looking at my investments and the wealthy people that I work with as customers, as advisors of my own money, they'll tell you, you've got to look out for the best return on your investment and the best way to protect it. And I can't think of any other investment to protect your wealth than physical precious metals. And I'm going to go into that. And why precious metals and inflation? Well, gold for thousands of years has been a great hedge against this demon we call inflation. And then I'm going to go into how do you get into gold. If you're not already in it, I'm going to go over a couple different ways you can get into precious metals, real gold, real silver, all the features, all the benefits, and all the tax differences. And then I'll answer any questions you have. So let's get started. Now, why do you need to know the real numbers? Well, because almost all of the numbers that you hear on TV, that you see in podcasts, that you see on news articles, whether they be online or in print, they're so manipulated. Almost everything out there is manipulated. Just look at the Federal Reserve, right? Jerome Powell, he goes on every month and talks about how we're doing with inflation, interest rates, and all these numbers. And I can't think of a source that is more skewed with data than the Federal Reserve. I can't. I really can't. And even if you look at commodities that usually are a reflection of inflation, they're also manipulated. If they have a financial instrument tied to the data, guess what? It's probably manipulated. If they have shareholders tied to that investment data, guess what? It's probably skewed. If there's lobbyists in Washington trying to get subsidies or try to pass a law that helps protect the asset or the underlying derivative, if you will, or the underlying asset that might be a derivative on the commodity side, guess what? It's probably being manipulated. So you need to know what these true indicators are to understand, how inflation really is working against you and your investments. And you need to know the calculations so that you can make these decisions yourself. So you don't have to listen to the Federal Reserve when they come out monthly with their inflation numbers. You don't have to look at commodities to try to calculate the true inflation. Like right now, oil's in the news, right? Oil's been going up. Oil's been going up. Wow, that's going to be a huge inflator of inflation, right? Yes, and it's probably embellished, right? It's probably pronounced because of the Strait of Hormuz. Perfect example is this, guys. Everyone on this call. We are a net exporter of oil in America, right? We don't need anyone else's oil. We make so much that we're able to sell our excess. Well, did the Strait of Hormuz stop us from getting oil? No. But then why is our gas prices double since this war started, right? So again, not a very good indicator of exactly what's going on with inflation. So the two big indicators I'm going to teach you about are stamp prices. Yep, good old postage stamp prices. And M2 money supply. Now, M2 money supply is a little convoluted, but bear with me. I'm going to teach you how that works so you can calculate true inflation. Now, I kind of led you down this path already. Stamps don't lie. Why? There's no financial instrument behind it. It is true net cost minus overhead, right? How much does it cost to produce? Add the overhead, boom, you got the cost of a stamp. Period, end of statement. You don't have lobbyists in Washington trying to get subsidies. You don't have shareholders trying to lobby prices so that they can get people to buy their stock. It is a true indicator of inflation. No complex foreign inputs or costs. It's right here in America with all the costs being here in America. So I love stamps saying, how is inflation going? Well, this is just going back to 2020. I don't want, in between 2019 and 2021 here is about the same price, about 56, 57 cents. But, click too many buttons. And then we just got approved, I think a week or so ago, a new price of 82 cents. So if you take 57 cents and you go to 82 cents, right? We're talking about 50% inflation, near 50% inflation. And it's not in 6 years, although it is 2026, because 2026 has just started. So we're talking almost 50% inflation in 5 years. And that's like a true number. That means if you have 100 grand 5 years ago, you now have the spending power of 70 grand. If you have a million, you have the spending power of 700 grand. You lost 30% of the value of your money in 5 years. And you can't manipulate this number. It is the true net inflation that we are experiencing as Americans here in America, minus the fluff, minus the
Right.
huff, minus the puff. Now, this is
But Drew,
what
I think if you don't mind me saying, I think that's a real thing that people are experiencing in their day-to-day life. When you go to the grocery store, if you're someone that consistently buys the same groceries, you have watched those prices. I mean, I buy this specific cut of steak that we buy the same thing for my kids every week. I watched it go from $9 to $15. It's 14.20 now. It's a real number now. And if you go and you see this consistently with the things, a box of cereal, look at what cereal prices have done. That's really what Americans are experiencing. And when you say yes, the stamp is the purest indicator, I think that's the word that fits because it doesn't have external influences, it's not commoditized, et cetera, et cetera. It's a pure pass through, but it's also reflective of what we as American citizens feel when we go to the grocery store or when we go to buy a car or to buy things. We see that. And we're being told it's 2%, we're being 2.9%. Come on. We know it's not 2.9%, you know?
Well, so these numbers, by the way, are the numbers, like you said, that the Federal Reserve,
Reported.
and the reason why I want everybody to look at something that's not tied to a specific commodity, let's look at eggs. Eggs jumped up in price for a reason that was not reflective of all food, right? There was a lot of euthanized stock that had to be killed off to get rid of the viruses in the animals, right? So there was a shortage of chickens for a while, hens, if you will, right? So there was a true production reduction in eggs, so that inflated the price. And guess what? It has come down, but again, to me, it's too manipulated of one commodity to really understand the true cost of everyday living. But you're right. Groceries, if you spend any money groceries and you have kids, it's gone up.
Oh,
But
yeah.
again, I like to say, you know what? Let's take away, right? Cocoa was up for a little while for, the reason cocoa was up, and it wasn't necessarily inflation. It was specific to cocoa, right? Eggs specific to eggs, right? So I wanted to say, hey, let's take, because groceries can get a little manipulated, right? But this is what I want everyone to understand. Look at what our Federal Reserve is saying what inflation is, right? As low as 2.9% this last year alone, it's like 10%. How can they go and say it's 2.9%? They can't.
Yeah.
I just can't believe they can go in front of the camera and talk people into thinking it is 2.9%. It
Drew,
can't even be
that's not on a
close.
camera. That's off of their website. They have that listed right now. That's on their website. I mean, that's the incredible part to me.
And
That they're
again, we're going to go
publicly
into
stating.
gold because gold is a great and always has been a great hedge against inflation. Not only do you get a great return, right, based on its historical value and growth, it's also insulated against the very threat to your wealth, inflation. And don't let the talking heads on TV, right, or any of the podcasts that you watch or listen to, or the videos you watch online, we are averaging almost 10% a year. This is getting out of control. And if you
Yeah.
don't do something about it, your wealth, it might say $1 million in your IRA. It might say $5 million. Well, if it only spends half of that value when you get to take it out, did you really protect yourself? Did you really hedge against something that we know is happening and going to continue to happen? Right? And here's another one. Now, this one I like to bring up because this also should scare everybody, but you got to know how to read the numbers. The M2 money supply. Now, what is that? It's us printing the money. Here, I want to jump out real quick.
Yeah.
So,
Can you articulate precisely what that is? Because I
yeah.
think it's really important that people understand what the M2 money supply is.
So the money supply is our government prints actual dollars. Now, they can't print dollars unless they have a value attached to it. So right now, right, we're $39 trillion in debt. Oh, if you want to see how scary this is getting, there are projections we're going to be near $70 to $100 trillion in debt by 2030. I mean, that's a big gap, right? But at the rate we're spending, it could be more toward that $100 trillion in value, right? Well, we
Especially with the war.
cannot
Yeah.
spend money unless we have a buyer of our debt, right? So and I'm very making this very basic. This is a little more complex than this, but very basic. To get the money, we call up the Treasury, right? The Federal Reserve calls up the Treasury and says, "Hey, can you print out, right, $10 trillion?" And then Treasury prints out that money, and then the Federal Reserve turns it into a note and then sells it at auction. Okay? Now, that money that they printed is now in circulation for use, right? And that circulation is at all the reserve banks and all the branches that come off the reserve banks and is circulated in America, right? So every time this goes up, 39 trillion to 40 trillion, 50, 80, we've got to print out more money, sell more treasuries, and that money that's printed out goes into circulation. Now, this is the calculation you have to be worried about, because we did increase M2 money supply. So the government printed 5% more money than normal, and that is too much. Why? Did anyone remember? A little quiz here. We got a few people here. Who remembers what the inflation was last year? 2.9%. So we printed more money than our inflation. That's not good. All right. If you see money supply go up more than our inflation, that's dangerous. All right. Just right then and there.
Yep.
So keep that in mind. Okay. That being said, keep that in mind. These are the calculations that go into the money supply that you need to know about. Savings, right? Spending, and GDP. Now, there's more calculations into the money supply, imports, exports, right? But these are the three you have to watch out for. If spending increases and savings decreases, meaning we keep on spending money and we do not save as Americans, and money supply increases, bad. Inflation is going to accelerate and continue to accelerate, right?
Yeah.
So does anyone want to guess? Are we spending more money and saving less going into this more money printed? The answer is yes. And you can do your own research. Go online right now and say, are we saving? Are Americans saving right now more than normal? No, we are not. Are Americans spending more than normal right now? Yes, they are. So if money supply goes up, and we spend more into it, and we don't save more into it, it is inflationary and dangerous. Wow. All right. Now,
So it's almost compounding inflationary because you've
it
already
is compounding inflationary. It is. Now, last calculation, GDP. This is the worst one, and we're going into supply side economics. What does that mean? Well, if our GDP is not growing, we are not producing more goods, and we have more money printed, we have more money than goods. That's inflationary, right? We have too much money chasing too few products. So you tell me, is our GDP growing or not?
drives the cost up. Wow, that's incredible.
And we
That's a
even
great
had,
analysis.
by the way, every quarter last year, and you can look this up, every quarter last year was downgraded. Our GDP was downgraded. We even posted one quarter in 2025 that was downgraded to a negative number. We lost production value in one quarter in 2025. And the calculation for this, watch first quarter is coming out soon. Projections are 1 to 3%, but I wouldn't believe anything you see on TV wait for the fixing. When they go and fix the numbers, they usually fix the numbers mid-year and end of year, because every calculation last year that came out was revised down. So we'll probably say it's 1 to 3%, right? Because that's the forecast, and we want to make sure we meet the forecast. So first quarter is coming out. GDP numbers are coming out this month. Okay, so look out for them. 1 to 3%. If we even meet that, though, what was money supply increase again, everybody? Here, let me circle it. Money supply increase. Sorry, I hit my cord here. All right, money supply, people. What was money supply increase?
Almost 5%. It's
So
crazy.
wait, if our
That's
GDP
incredible.
forecast is 1 to 3%, did the money supply grow more than or is it projected to grow more than the GDP? And the answer is yes. Again, very
That's
inflationary
incredible.
by more than double. So we printed more than double the money than we are expecting to actually grow our GDP, so based on percentages. Now, that is, again, very dangerous. So now why am I going all over this? Because gold goes up with all these numbers. Okay? Gold is a great hedge against inflation. It is a great protection against the very thing that is robbing your wealth, physical precious metals. And again, don't listen to me say this. These are the top analysts in the world. Jamie Dimon is calling for 10,000 an ounce gold. The chief investment officer of Morgan Stanley is saying you better have at least 20% of your wealth in physical precious metals. By the way, he doesn't get paid to say that. As a
The
matter of
opposite.
fact, in my 15, 16 years of doing this, okay, now 16 years, of helping people protect their retirement accounts with real physical precious metals, I've never heard a financial advisor say, hey, you better get physical precious metals in your retirement account. Why? Because they don't make money on you. They don't make
Yeah,
any
there's no
money on
benefit.
a physical asset.
There's no benefit to them.
Now, why get gold? Number one, most people don't know. You can own physical precious metals in your retirement account. It's a tax-free, penalty-free move. You lose no value. You're just moving from paper to physical assets. Now, why might you want to do that? Because we're going broke. This inflation train that we're on is not stopping. It's a runaway train. And if you don't do something about your investments, insulating against this, you can lose a lot of spending power over time. And again, physical precious metals can be owned in your retirement account, tax-free, penalty-free move. You can take any money that you have in a qualifying 401k or IRA and move it tax-free, penalty-free into gold. Also, physical precious metals are not taxed the same as paper assets. You heard me right. Not taxed the same as stocks, bonds, mutual funds, annuities, or even cryptocurrency. And I'm sure in retirement, everyone on this call here rather spend less in taxes than more in taxes. Am I right? Also, physical precious metals in your retirement account is 100% insured with all risk coverage. Oh, by the way, remember that video I did last week about Anthropic releasing a new AI model that's going to expose all of these companies' backdoors, security backdoors? Okay, everyone on this call, you need to look at the bottom of your brokerage statements. They all updated. My Schwab account just updated. You should see the language now protecting brokerages against them having to pay out on losses from your account. The language now is more than doubled. These investments have absolutely no insurance. There is no protection of risk within these accounts. Cybersecurity threats are not covered. I mean, my disclaimer at the bottom of my Schwab statement just doubled in size since last week. Physical precious metals in your retirement account, 100% insured. Why? Because you own it. It's a real asset. It's an asset that's under armed guard 24 hours a day, 7 days a week, so it can have 100% all risk coverage. Your digitally held assets in a retirement account inside of a brokerage account have no insurance. You know why? Because you don't own them. Most people don't know that. You don't own the investment. You have beneficial interest. That means you get the benefit if the price goes up, and you get the benefit if the price goes down. But you don't own it, so they can't insure it. And they just put on new language to further protect themselves against possible cybersecurity threats that are more than likely coming down the pipe. And if you didn't read this, look up the Anthropic model,
Project Glasswing. Project
Mythos,
Glasswing.
just came out. The Federal Reserve Chairman, Jerome Powell, along with Scott Bessent, our Secretary of Treasury, just met with bank CEOs to warn of the imminent threat that this new AI model exposes, showing the back door of every financial institution, every government, federal agency, every state agency, personal accounts. It is, they're saying, going to be a field day for hackers. And guess what? You can't hack a physical gold coin, especially one that has also got 100% all risk coverage insurance on it. And then also you can own physical coins that are deemed non-reportable by the IRS. Now, this is one thing I absolutely love about gold. Real gold, real silver. You can actually own coins that are deemed non-reportable by the IRS. Oh, what does that mean? Well, I'll go over, if you ever want to move forward, I can actually go online and show you these coins that as long as you own them, you don't have to report to anybody that you have them. And me as your dealer, I don't have to tell anyone you bought them from me. It's the only asset I know of, the last safe haven of privacy and anonymity that I know of, where you can actually own something that nobody else has to know you have besides you. You can't own a stock without everyone knowing you have it. You can't own a house without everyone knowing you have it. Heck, you can't even own Bitcoin anymore without everyone knowing you have it.
True.
Now,
Very true.
pretty much wrapping up here. I don't know why I jumped out on my screen here. That was weird. How do you get gold? There's two ways to get gold. Inside your IRA, it's a 10-minute application. That's it. It's like opening a checking account. It takes 10 minutes to open the account. It does take about a week to 10 days to move the money. Once the money moves, again, 100% move, no taxes, no discounts, no penalties, no fees, just moves from your current account to your gold account to buy gold with. Once it does, a week to 10 days later, you and I go online. I show you everything available to you. Gold, silver, coins, bars. There's even platinum and palladium. You pick out what you want. You're in charge. I'm probably the only company out there that shows my competitors' pricing. I don't know anyone else that does it. You can see firsthand what you're getting in price compared to everybody else out there. You know you're getting a good deal. Once you execute the order, you click the button. We execute the order. The metals get shipped to the depository you pick nearest you. These are non-bank, non-federal depositories. They have nothing to do with our federal government. They have nothing to do with our banking system. They just meet the strict guidelines of our federal government for safety and security. Why? Because our government wants their taxes, right? You can go visit your gold anytime you want. You have point-and-click access to your gold. Once it gets to the vault, it goes under white glove inspection, x-rayed, ultrasound, and then fully insured and stored in your section of the vault until you decide to take it out. And you have point and click access. Anytime you want, click a button, have the coin shipped to your house. Or click a button, liquidate. As Michael said at the very beginning of the call, we are a full service dealer. So what does that mean? Not only can we sell you metal, we can liquidate you, and our liquidation is best in business. Fair market value, no discounts, no penalties, no fees, usually cashed out same day. They're all over the country. Darlene, I would suggest at the very end, schedule time with me. I can go over everything, all the details, and the one closest to you. And you can visit them.
They are only IRS approved vaults, just to be clear. Everything is, there's not just any vault. There are very specific ones that pass very high thresholds and guidelines.
And that's what allows, by the way, to get the all risk coverage, 100%
Correct.
all risk coverage, because these are such secure facilities. But they're all over the country. You can pick the one closest to you. Darlene, we're going to put my calendar. Just call me. We can schedule a time, talk about all the details of how you get it in, how you get it out, all that stuff. Okay, you can also, by the way, real quick little advertisement, you can also buy gold and silver and have it directly delivered to you. Nobody I know in this business delivers physical precious metals faster, safer, more effectively than us. Gold in your hands 1 to 2 days. That's it. Okay, same process, but now the difference is when you pick the metals you like, they get shipped to your house fully insured until you sign for them. And again, we're there for you on the back end. Whenever you want to cash out, call us up. Fair market value, no discounts, no penalties, no fees, same day. Now,
Oh, Drew,
I'm
before
going
you
to
go to
do
the
some
next one, real
Yep.
can you go back to that slide real quick?
Yeah.
So he likes to glaze over it because to him it's not a big deal. But one thing Drew does offer, guys, he offers a one-on-one call with you. You get a complimentary, and we say this very specifically, it's complimentary, no obligation, personalized metals strategy plan. Okay. So just so you guys understand what that means. This is not just a some kind of like sales pitch and you have to buy and this and that. Okay. This is a let's talk about what you're trying to accomplish. Let's look at where you are right now and how you're going to get there, and let's develop a plan to get you there. And there's no obligation with it. So once you have that plan, and he'll go over the pricing, he'll look at competitors' pricing and all of that, you can take that plan and you can go wherever you want with it. We have people, I can tell you this right now, that shop Drew all the time. He's confident that he has the best price for a reason. Okay. But there is no obligation with that. And he does follow up with you to make sure that you have the information you need and things like that. But I want to stress something here. If you've been with us for the last 30 minutes and you've listened to Drew, your explanation of the M2 money policy, the stamp section of this, you guys understand what talking to Drew is like. I get the benefit of just about every weekday. I get to spend 20, 30 minutes with him every morning and go over policies and things that are changing and stuff. Take advantage of this, guys. You have a very, very, very unique opportunity to talk to a top tier analyst and get their perspective on what's happening. You can ask the deeper questions. You can go into specific things that are changing. Whatever your perspective is, take advantage of that, though, guys. I just put the link in the chat. It's the link dot the goldiqgroup.com one. Take advantage of it, guys. It's not always going to be there. At some point, he's too busy to get in touch with, but he's not right now. So take advantage of it.
Yeah,
Go
so
ahead.
just real quick, and I was going to come back to the page. I just want to show everybody. You can look me up online. So this is my personal website, thecompleteinvestor.net. You can read about any one of my reviews that I have on my website, but you can actually, because I've worked for two of the top three gold dealers in America since I started, myself personally since 2010. You can type in my name, Drew Urasek, gold, in any search engine, and see I only have 5-star reviews. And there's 3 reasons, in my opinion. Number 1, I educate first. I don't ever push anyone into anything they don't want to do. I want to make sure you understand all of your options. Number 2, I support you in your decision. You decide, I support you. That's it. I work for you. And then number 3, I make myself available. Every one of my clients is my cell phone number. You can literally reach me day or night on the weekends, whenever you need me. And again, I'm there for you on the front end when you buy the metals. But if you ever want to cash out, and I've had clients with me now for a long time. I had one gentleman make 600-700% return on his money, wanted to cash out half his money so he could buy an office building. Hey, no problem. Call me up. Fair market value, no discounts, no penalties, no fees. Usually cashed out same day. And there's some people that actually have a lot of gold. Some of you might have a lot of gold and you want to cash out. I'll fly out to you, cash you out in the comfort of your home. Nobody does that, or at least nobody I know. So let's go back to the screen that, I want to answer any questions you have, obviously. My calendar is up to date, current. If you click that button, I can meet with you for 10 minutes, talk about anything you want to talk about. Again, I don't push anyone into anything they don't want to do. I educate first, and then I support you in whatever decision you want to make. Right now, though, I am telling you, I can't guarantee anything, but I can tell you this. The chances of us spending more money as a country and going broke has a high probability of happening. Physical gold, real silver, is a great protection against that. And 100% insured inside your retirement account, and protection against cybersecurity threats, and not taxed the same as paper assets. So there's a lot of value. So at least you should check it out, in my opinion.
Drew, one of the people asked the question, what about GLD? Is it insured? You want to talk about paper asset gold and how that works?
Not only is it not insured, it's not real gold. I mean, it does have gold assets, but it's not one for one. It can't be. They have employees. They pay a commission to fund managers to sell GLD into their funds. Well, if they're paying a commission, you're not getting all the gold. So that's number one. Number two, no, it's not insured. Has no insurance, and there's something everyone should look up online right now. Counterparty risk. Counterparty risk. Let me simplify the definition. You can do your own research. It means they don't have to pay you if there's a liquidation event. So wait a minute. You're paying money for what should be gold, and it's not 100% gold. It's not insured. It gets no tax difference that physical gold offers, right? And it can be hacked, right? It's a digitally held asset. And then last but not least, if there's a liquidation event, you don't get the gold. Why get it?
Right, right. Well, and there are traders that do it. That's one thing, but to do it, and
Yeah,
they'll
investing
trade.
is different than trading. Yeah, if you're
This is
trading
an
and
investment conversation, right?
yeah,
Um,
and there's some things you can do that are cool with GLD that you can't do, right? You can do options on it, right? Yeah, as a trader, yes, totally different. I'm talking about investing and protecting your wealth, right?
long
I
term,
mean,
long term.
again, if the
Yeah.
CIO, Chief Investment Officer at Morgan Stanley, is saying you should have at least 20% of your wealth in physical precious metals, that's saying, hey, I want to make sure this is here, when the dust settles, right? I want to make sure this is here, insured, protected against cybersecurity threats. When I'm in retirement, I'd rather be taxed less than more, right? Or I want to take physical possession of something because I don't want to be hacked, right? These are the things that physical gold offers.
Let me ask a quick question on this. And I was just thinking about this today. Probably share it with the group. So, gold went through a pullback in March, and just ground its way back up. Are we still at a great price to buy right now for gold? What's your thought on that?
Oh, well, yeah. I mean, we actually did a webinar on this. So we had the first significant pullback of any type since 2015. Actually, probably 2011, right? So it was a huge discount, and we had such a hard bounce and rip up while all the markets were falling. It was such a strong buying indicator, and we're still within 10% of that bounce. So the next level up is 5,000. Once we pass 5,000, Bank of America is calling for 6,000 an ounce by the end of this year.
By the
So
end of the year. By
the
the end of
way
the
I
year.
look at this, the way I look at this, Michael, the people that get in now are either A, going to be in before 5,000 or after 5,000. So
Yeah,
it's your call, right? You can get it anytime you want, but you're going to be either before 5,000 or after 5,000.
yeah, yeah.
Great
Uh,
questions, by the way. If you
can
can
you
bear with
explain
me,
how
why don't you talk for 20 seconds? I'm going to pull, I got to share this just happened this week. I got to read this. I'm pulling up my Schwab account. Can you talk about something real quick while I pull this up?
Yeah, no, Alex had just asked, can you explain how a liquidation would happen with a GLD fund? How it would go to zero, essentially, a liquidation event.
I mean, a cybersecurity threat.
Right.
Say you get hacked, your account gets hacked. Let's say all of GLD gets hacked. Let's say literally the whole GLD fund gets hacked, which could happen. Guys, the Social Security, did you guys read that the Social Security Administration got hacked like a year ago and 90% of people's information got lost? That just
Exposed.
happened. The
Was
whole
exposed.
freaking social, I mean, like they made it seem like it was nothing. It's like, oh, no big deal. Now
Yeah.
just imagine if it was the whole GLD account was hacked and all the money was taken out, right? But there could be other things, just your personal brokerage could have had some kind of flaw in its system and lost all of its holdings of GLD, right? So I got to read this to you guys. This just came out this week. I was putting in a trade today. Ready for this? It's more than doubled in length. It used to only say these investments aren't insured. That's all it used to say. Now this is what it says. Ready? Investments and investment insurance products. This is not a deposit. No FDIC insurance. Not insured by any federal government agency, no bank guarantee, no insurance of any value, may lose value. That's what it says now. It went from one sentence to like 3 lines. And this just happened when the Federal Reserve, right, and the Secretary of Treasury met with all the bank CEOs, the top bank CEOs last week because of the up and coming Anthropic release, Mythos release, which is basically saying that you can look it up. The government's trying to stop them from releasing it. They've released it to 11 companies. It's pretty scary, in my opinion. This is one of the reasons why, because you get real gold, you can't hack a physical gold coin.
Yeah, yeah, yeah. It's incredible. I think also too, you have to understand with GLD is the concept that it's, for all intents and purposes, it's a fund. And anytime you have a fund, you've got counterparty risk, you've got all these other factors that come into it. With hard asset gold, it's the hard asset itself. There's no, you don't need a marketplace for it. You don't need anything other than someone to buy it from you. It's not, you know what I'm saying? It's such a different concept. And I think that takes, especially if you're a trader, like coming from a trading background, that's something sometimes it's hard to digest.
It's a
Does that make sense?
facsimile. It's a facsimile of the real thing, right? So if you're using it for that reason, hey, great. But if you're trying to use it for the protections of real gold, then you're in the wrong product.
Uh, yes, Darlene, the disclosures changed. There was can you see those, Drew? I don't know if you can see those. They're under
Oh,
the
sorry, I'm in
Q&A.
the wrong view here.
Yep. So Darlene, yes, the disclosures changed for all of them. There was actually a big report put out by McKinsey about it. That due to the anthropic risk or it is Project Glasswing, correct? I think is
Glasswing,
what
I
it's
think,
called.
yeah. Hmm.
Yeah, that they reduced the protections and had to give clarity on the protections that the SIPC actually covers. And the thing with SIPC insurance is it only covers default of the broker, like when Lehman Brothers went out, but it doesn't cover cyber theft or things like that, which is the major risk with Project Glasswing, the Anthropic AI. So the SEC was required to give clarity to all of that information about the insurance and the specific things that are covered and not covered by the insurance. So there's been a whole new round of disclosures that have been issued, as far as I know, by every single broker dealer in the United
Well, if
States.
Schwab did it, I guarantee everybody did it.
Yeah, everybody did it. But they're all different though. Obviously, there's minor differences.
Different
I don't
lawyers.
believe they're required. Yeah, yeah, and it will get adjusted over time. I think we'll see some significant changes to it.
But it's
Um,
just wild. It's just wild to me that just from one news release, it changed. Like I said, the language changed within a week. It's crazy.
yeah.
Yeah.
Darlene, the risk with Anthropic is that it's an AI technology that is specifically designed to hack financial accounts and financial uh, security programs. And basically, the success rate on it was astronomically high. So it basically put any and all digital access points for your finances at risk. But it's got a metered release. Correct me if I'm wrong here, Drew. It was initially released to the federal government, correct? Like there was initial.
That's one of the 11 was the federal government. Yeah.
Right, right. So
Yeah,
yeah,
so
it's a very
basically, yeah, Darlene,
private.
the release of this AI technology is showing the back door to any entity's cybersecurity. So it's saying you want to hack this company, this is how you do it. That's basically it. It's showing the back door, and this is federal governments, federal agencies, local and state agencies, personal financial accounts, banking systems, anything that has an operating system. This AI technology can say, this is how you get into this account and steal information.
I don't know how many it was released to. I do know that it was a limited release, but yeah, it was absolutely incredible. And I guess we kind of all knew something like that was coming. It was just a matter of time before somebody designed that. But yeah,
Yes,
very
Alex, the answer is yes. If you are hacked, any asset you have in a traditional brokerage, any stock, bond, mutual fund, annuity, even cryptocurrency, right? If it's hacked, it is not covered, has zero insurance.
And that's not new, Alex, just to be clear. That's something that's SIPC insurance has always been that. It's just that right now with the Anthropic and the increase in cyber attacks, it's come to prevalence that people aren't protected. But that's not new. It's always been that way. Exactly. Yeah, Darlene said instead of preventing its use, they just lower the accountability of the financial institutions.
That's
They
what they
didn't really
did. No, they
lower.
just literally covered their butts. That's what they did.
Yeah,
They're
I was
like,
gonna
oh
say,
crap.
yeah. They just made sure they covered their butts even better than they were before. So they covered them with clarity, I think is probably the best description of it. So yeah, I think
You're not screwed if you have gold.
yeah,
It's
yeah.
lasted 5,000. It's lasted 5,000 years for a reason.
Well, and somebody brought up a point. They said, "Oh, well, the filing and the documentation that shows that you own the gold could be hacked." It absolutely can, and that's why it
But there's a
being
paper
insured as
backup.
an
There's
asset.
a paper and
Yeah, there's
physical backup. So
yeah,
they'd
that's
have
why
to
it
go
being
into
insured.
the vault, go past an armed security guard,
Take your gold.
breach, safes and vaults, and go take the printed out invoice that's in your actual vault section where your gold is.
And it's still insured if they do that, by the way.
And then there's also a third party insurance has an invoice too, so they'd
Right.
have to hack the insurance company too, by the way, which is Lloyd's of London, which is not even in America, so it's a private insurance company older than the U.S. itself. So they'd have to
Right.
get over there to get that information too. So you're actually protected three ways, and two of the ways are physical. So the chance of them breaching that is a lot easier to hack your Schwab account, right, than it is, or your Edward Jones account than
Or
it would
your
be to get your
yeah, I
gold.
was gonna say, or your Robinhood account, or yeah. So, um, well, Drew, again, I got to tell you, the vaults that are outside the U.S. to mitigate the 1933 risk. What do you think of the 1933 risk?
Who asked that?
Darlene asked it. Do you
So,
think that's a
Darlene,
real?
the most misunderstood and manipulated piece of information ever. The 1933 Act, nobody took anybody's gold. Nobody went into anybody's house. Nobody went into anybody's vault. Nobody went and took anybody's gold. I can tell you that by why with 100% truth and honesty because I can sell you 1933 coins. If they were all taken,
Mhm.
how can I sell them to you? So they're actually a very popular coin. I sell them all the time. What happened was that the government, and my grandfather basically lived through this. 21 years old, living in Newark, New Jersey when the crash happened. Local merchants would not take paper money. They would only take real gold, real silver, and it was becoming a huge problem. So the government says, I can't let these merchants take coins anymore for value. I need them to take dollars. So they made the Reclamation Act, 1933 Reclamation Act, and they said, if you want paper money value of your gold to use to go shopping, you only have this much time to turn in your gold, okay, to get the value of the gold. But nobody sold their gold. I mean, some people I'm sure did, but the majority of gold holdings were not sold. They were kept. And I know that because, again, I can sell you a 1933 D series, by the way, worth a lot of money. S series, these are the vaults that are the mints that they came out of. I can sell you a 1929. I can sell you a 1931. I can sell you a 1930. So there's nothing further from the truth. Nobody took anybody's gold. Nobody took took their weapons and went in people's houses and took their gold. Nothing could be further from the truth.
Now, Drew, Ron brought up a really good point. He said he's sold. He's going to go buy himself a gold Rolex. So
Nice.
let's go.
Just make sure
Um,
you get a good one and a real one.
yeah, yeah, exactly. Well, guys, I want to thank you very much for joining us tonight. Drew, as always, man, I love listening to you talk. You really do an amazing job. I will send out a copy of the video. There will be a replay that goes out. If you didn't, if you missed the piece about the stamps and the M2 money policy, I'm actually going to go back and rewatch the section on the M2 money policy. You did a great job explaining it. I just wanted to let it sink in. So I'll be sharing all that with you guys. And I'm going to say it one more time. Cannot recommend it enough. Schedule your time with Drew. The link is in the chat. Take that 20 minutes, 30 minutes, have that conversation, even if it's just to come up with a concept or to ask the questions. Get to know Drew, get him on your get on his calendar, have that conversation. It's worth it, guys. Cannot recommend it enough. All right. Thank you
Yep.
guys very much. Drew, thank you, sir.
All right,
Do
guys.
appreciate you.